Welcome, everybody. Today, we're going to dive into what I would assume is a underutilized yet powerful financing tool available to small business owners. Specifically, we're talking about SBA lending. Joining me today, I've got Gene Richtsmeier and Michael Burling, who know this space inside and out. Gene is a regional banker from Minnesota, and Michael is an SBA lending expert from Huntington National Bank, the nation's #1 SBA lender. Huntington has helped thousands of small businesses access capital to start and grow their businesses. Gene and Michael are here to share what you need to know about how SBA loans work, who qualifies, and how businesses, especially in our DME space, can use them strategically. So without further ado, Gene and Michael, I'd love for you both just to introduce yourself, talk a little bit about your role and kind of what brings you here today.
Yeah, no, absolutely. I appreciate that. So, Michael Burling, thanks for having me. Huntington National Bank going on here 4 years, 10 years of primarily SBA lending experience and background, focusing on everything access to capital from acquisitions, startups, working capital, expansion, and so forth. And really what just brings me here today is obviously to kind of spread the message about SBA lending and how it can positively impact, particularly today anyways, the DME space for sure.
Yeah, and Gene Richtsmeier, I'm a regional relationship manager, and I primarily service business customers from startup to 50 million in revenue. And a lot of helping clients with access to capital involves SBA lending. But I work in all sorts of different forms of lending, from equipment financing, commercial real estate. Access to capital and cash management are my primary expertise. I've been in the banking business for a little over 10 years, specifically in business banking.
Great. So I guess just to jump right in it, give us kind of a quick overview. What is SBA lending?
Yeah, no, awesome. And great question. So the brief and easiest synopsis to SBA lending in general are simply loans that are partially guaranteed by the U.S. Small Business Administration. These types of loans can be wide ranging and are really designed to help small businesses through access to capital with financing that may otherwise be a touch more difficult to obtain through traditional methods and means. But outside of that, too, also a way to make access to capital easier, primarily in the small business sector for companies that range from startup to the size standard limit of SBA lending, which varies based off of industry.
Yeah, I was going to say for SBA in particular, it kind of reminds me of, for those of you who are familiar with the mortgage business like Fannie or Freddie, SBA is a government-backed program that allow banks to maybe do some deals that they wouldn't particularly be able to do without the SBA program. Wouldn't you say, Michael?
Yeah, no, absolutely. So there is a huge gap between what banks and non-bank lenders will look at from a collateral basis to SBA type projects, which can be focused exclusively and only on goodwill. And we'll get to that a little bit later on here, but other non-collateralized type options. The SBA is a great method to give banks the opportunity to extend risk and credit to businesses that wouldn't otherwise be able to obtain them because of a lack of collateral, potential also lack of cash liquidity and so forth.
So I hear a little bit about these 7A loans out there. Can you expand on that? And I guess, how do they work for somebody that may not necessarily know or maybe has never even heard of what the SBA 7A loan is?
Yeah, absolutely. And as far as the S7A loan specifically, how that works, there are a few different types of SBA projects that the SBA administers, 7A being one of them, and the most commonly used SBA product that banks, credit unions, and non-bank lenders provide. And it's a type of financing that's provided by participating lenders such as Huntington National Bank that are partially guaranteed by the SBA. These types of loans can be utilized for absolutely anything from the working capital to inventory purchases, for equipment purchases, for purchasing businesses. They generally come with more favorable terms than conventional counterparts, as they typically start at around 10 years in term length, and interest rates can be lower given the fact that there's a lack of collateral. So because of that, it provides us the ability to extend very specific type projects to very specific type needs.
Yeah, and I'm just thinking as it relates to, we have all dealt with, Michael and I have dealt with a lot of DME clients, right? And there's times when maybe if you're buying equipment, for example, which is a very common use for 7A, traditional equipment financing isn't an option. Maybe you're a startup or you're doing a newer project, or maybe your equipment partner doesn't like that project or that equipment for collateral. Maybe this could be an opportunity for the 7A to be used. So I've seen it used that way. Just another avenue that can provide clients access to capital maybe they wouldn't normally get. And if it wasn't for the SBA program, some of these projects would be much harder to get financed and not near as favorable terms, like the 10-year term and just different types of, really when it comes down to I guess it's financed by the company, not just looking at it as the asset as a whole. So it just provides some other avenues to do some things.
This is good stuff. So let's talk more directly about like the DME industry, and I like you're speaking with a VGM member, one of the customers that I talk to regularly. What should they be doing to take advantage of the SBA loans once they've decided they're ready to move forward?
Yeah, it really depends on the stage of their company, where they're in. Are they in growth stage? Are they already at maturity? Are they stuck at maturity and trying to grow? Are they a true startup? So I think what DME companies, durable medical equipment companies need to kind of understand when it comes to the SBA is that there are specific rules, eligibility requirements for sure, but it doesn't preclude generally businesses as a whole from receiving those financing terms that they're looking for that may be more favorable than the conventional methods. So I would just tell individuals if they're in the startup stage, saying, hey, look, get with a lending partner early, get with your mentors early, start developing your business plan, start developing your projections, because the lending institution is going to ask for those pieces. Make sure that you have quality financials ready to go, your tax returns, things of that nature. Just be overall prepared for a lending or an underwriting event as you would for any other type of loan facility, and they should be in good shape. And again, this is heavily predicated based off of the stage that the business is in. If it's an existing owner and they have everything ready to rock and roll, then getting with a partner in the SBA space like myself, like Gene, is a perfect early opportunity at any point of their stage in business cycle to start the process here with the SBA product.
Yeah, I'm just thinking out loud some reasons for where the 7A product or SBA product in general can be helpful is, buy medical equipment, purchase inventory, hire staff, delivery on vehicles, expand to a new location, or acquire another provider. So it's really I like what you said there, Michael, when it comes down to have an early conversation, kind of lay out kind of with where your partners are, like what you're looking to do, and plan early. Don't be deep into a project where you think something needs to get done, where it needs to get done tomorrow, and you haven't done any of the pre-work to figure out what's possible. And the rules are changing in the SBA space, right? And those change, lending guidelines change, not just SBA loans or loans in general. So it's good to, as you get closer to your project, have that pre-call discussion, but then also have follow-up discussions and have your lender part of your planning process.
Great. I want to talk a little bit about working capital, because I do think that's an issue in our industry. And just pretend I'm running Tyler's DME and I'm having trouble with a couple of my payers, let's say, and struggling to manage cash flow, and my day sales outstanding is a little bit of an issue. If I'm hearing you correctly, I can use an SBA loan to help with working capital.
Yeah, no, absolutely. And there's two different vehicles that we generally use for working capital that can be administered in different ways. Draw to term working capital 7A loans being the primary function when you're just looking for term working capital, meaning the working capital that's going to be put over that 10-year function that we discussed a little bit earlier. And those funds, while they do need to run through underwriting in generally in certain circumstances, are pretty wide ranging, meaning you can utilize those for inventory purchases. You can use those for payroll. You can use those for utilities. You can use those for rent to smooth out operational expenses. You can use them for pretty much anything that you could picture of or envision that your business's working capital need is. And beyond the term, the SBA also provides lines of credit as well that, depending on what the business is actually looking for, might be the most appropriate option for that particular business, depending on where they're at. And we can provide lines of credit to where it's advanced only based off of when the borrower requests it or when the business owner requests it, and they're paying their interest only payments as a typical line of credit would off of what they advance, versus on a term loan where they're immediately paying principal and interest on the entirety of what they requested.
Let's say, Michael, in your experience, I think what's great about maybe a draw, and for those who, maybe not heard what a draw to term means. Draw to term is like high level. You have a loan, but we didn't say you got a loan for 250,000. Draw to term means we didn't just, you closed on the loan, now you have 250,000 in your bank account and you're paying interest on that money today, right away, right? A draw to term is a facility in place that lets you advance on for certain purchases. I guess from my seat, Michael, maybe from your experience, maybe can you talk through what eligibility looks like for what a draw to term facility could be used for? I know we don't need to get so specific, but just broader kind of examples and points on what that would look like.
Yeah, generally it really is so wide ranging. It's easier to describe what you can't use it for than what you can use it for. And some of those pieces would be what we would discuss here a little bit further on, but acquisition financing. I mean, typically we shouldn't be financing working capital if you're looking to buy a business. If that's what you're trying to do, then we'd be looking at specifically a 7A loan for an acquisition. If the working capital need that you're thinking of in your head is when you're looking at your income statement, right? And you're kind of deciding over the next 3 to 9 months what my true expenses in the business looks like. Those are always going to be generally those working capital pieces, things that are on the day-to-day operationally speaking versus fixed assets. So the other piece that I would also mention wouldn't necessarily be applicable to a working capital type loan would be those equipment purchases, vehicle purchases, vans, things of that nature. And even loosely inventory, the SBA has a model for inventory financing as well, and that's completely separate topic, but working capital related items, non-inventory, non-equipment, non-commercial real estate, non-business acquisition, everything else is pretty much free game.
Yeah, understanding long-term, what your long-term uses are, what your long-term expenses are going to be versus your short-term. So those are things you're going to maybe want to evaluate when you're determining, what you need. Also, whoever your lending partner is, may have a discussion with them on what their firm feels would be eligible use of funds, right? So have that discussion on the front end. And then also that helps you figure out, because some different institutions may have different overlays, which is like additional rules on top of SBA rules on what they feel they can do a project on. So make sure you're being forefront on what you're doing and what you want to use the funds for. Because the last thing, I guess my biggest thing I would suggest, the reason why I suggest that is the last thing you want to do is spend so much time on a project and you get to the end and they're like, actually, that's not an eligible use of funds. And you just used all this time, all these resources, something that you could have figured out on the front end. So have an upfront conversation with your partner, be and be upfront with what you want to do, because they're gonna, and when you're filling out and you're having these questions, you be open and honest because it's gonna come up down the line, right? So make sure you're having that conversation early and everybody's aware of your plan. Because I think part of your process at times with the SBA is writing a business plan and what you're using the funds for. So it's just important to have some of that laid out. And the earlier you can have that conversation, I think the better, even if you're not thinking of applying for something, in the next month, but you should have an idea on kind of what your banking partners are going to want to need to get something in the process for you.
So a lot of great stuff, guys. And, DMEs oftentimes, if not all the time, have to purchase inventory up front. And as you guys know, as well as anybody, a lot of the manufacturers have, 30, 60-day terms, at max. Maybe there's some, depending on the product, may go a little bit further. But yeah, I would say 30 to 60 days is definitely an average. And day sales outstanding in our industry, gosh, for some can be over 100 days, and I'll say an average is probably 75 to 85 days. So you don't have to be a mathematician to understand that there's gonna be probably cash flow issues when looking at those variables. But Michael, I want to go back to something that you touched on just a couple minutes ago, because in our industry, it slowed down a little bit. It might pick up, but I know there was a time where acquisitions were happening like crazy, and obviously depending on cost of capital, it plays into this a little bit on what direction we may go in here in the future. But it sounds like I may be able to use SBA loans, or I can use an SBA loan option for acquisitions if I decide to grow my business in that manner.
Yeah, no, absolutely. And that's applicable to those who may be listening to this who haven't even started their business yet. You can acquire an existing business. You can also, what the SBA would define as expand, by owning a current business in the DME space and then acquiring another business in the DME space as well, provided certain eligibility criteria are met. But yeah, wholly speaking, the SBA can be used to finance acquisitions of existing businesses or to expand. Also, to just maybe expand your own territory by owning an existing business. You're looking to put something into a new location, or maybe expand your own existing business into another new location and acquire by organic expansion versus artificial expansion with the acquiring of a competitor, for instance. But the SBA term loans are largely the same. How you go about getting qualified for them changes a little bit, because in the SBA space, when you're acquiring a business, it's more predicated on the health of the business that you're acquiring than anything else. So generally speaking, what we need to focus on exclusively on an acquisition is how the health traditionally of that business that you're looking at has been performing historically, which is in the SBA world, generally the last 3 filed fiscal year ends. And we put a package together, and based off of that subject business's financials determines what we can loan on that acquisition.
Yeah, Michael, I know you've done over 200 transactions, particularly in the acquisition space in the last 3 years. So I know this is a really booming part of what the SBA is doing right now. You want to maybe from your chair, I would love to hear your thoughts on why that is and why SBA for an acquisition as opposed to conventional financing.
Yeah, and I think it just kind of goes back to the SBA program at the very beginning, and it's driven by access to capital and being for small business. It's about creating jobs. It's about instilling community and business within the communities that we serve. In the last 2 years, there have been a number of SBA policy changes. In the next 2 years, there will be significantly more changes as we see in the current climate rolling out, particularly with DOGE. It has not affected the SBA recently, that's for sure. But in the last number of years, the way that the SBA has allowed us to provide attractive financing options with prospective buyers has been immense. So the ability to look at transactions with virtually no money down, really no money down at all from a potential borrower has been super impactful. Being able to leverage seller financing as a means to help bridge the gap with our transactions in this space. But I think it really did start with the pandemic as well. That was kind of that jumping point. I've been doing this now, SBA lending and M&A deals specifically, for 10 years. So before the pandemic, during the pandemic, and coming out of the pandemic. And certainly what the pandemic did jumpstart, at least anecdotally, I can say this anyways, is the desire for being an entrepreneur and the desire for owning a business and the desire to expand and being self-sufficient. And I think that has driven a lot of our volume and a lot of our borrowers and customers and clients' success, along with SBA policy changes that have afforded us the ability to provide access to capital to those businesses owners that wouldn't otherwise have been able to receive that same capital just a few years ago.
What kind of, when we're looking at acquisitions in the SBA space, SBA's the term usually is for Main Street deals. When you hear that term Main Street SBA deal, acquisition deals, what does that mean to you? What does that look like?
Yeah, I mean, again, going into the Main Street lending, I look at deals in our space predominantly under $10 million of enterprise value. I can see the SBA product inching upwards on larger transactions with banks' desire and ability to do what's known in the industry as pari passu lending, and not to get into that at the moment, but essentially just the conventional loan tied with SBA loan to bridge the difference between what the SBA maximum dollars are, which is $5 million of aggregate credit exposure, versus what the financing opportunity may be. So while you can purchase and acquire much larger businesses than what you may otherwise think, mostly these deals trade well under $5 million. So I am generally looking at opportunities at any given time for acquisition in the range of $300,000 to $3.5 million. That's kind of our sweet spot here, particularly at Huntington. That $1 to $2 million range is a real nice sweet spot for us. But we're always happy to look at these transactions regardless of the dollar size and regardless of the customer size. Gene, as you pointed out earlier, you help customers, sky's the limit essentially, right? So every stage of the process from startup to maturity, we can be there for them. But the SBA specifically really likes to focus on those deals where we're looking at enterprise value of companies less than $10 million traditionally.
Which is great when I just think about my interactions with the VGM community and the different business owners I met. This typically kind of falls in a number of our members' space, right? So, and I think what I see for people who own a business and they want to know what's financeable, well, maybe talking to a lending partner to help them figure out what's possible from the SBA side can make something more palatable for a buyer, because they can actually get financing to purchase this, as opposed to just looking at maybe like what I deal with a lot of in conventional is a strategic partner that we're just financing an existing business to buy another business. And sometimes that's done conventionally. But if you're an employee or somebody else that's looking to make a purchase, understanding what's possible in whoever your lender you're working with, just having that understanding as a seller on what they think the SBA is willing to finance on their business might help someone with a retirement plan, right? Or start planning to where they need to be to build the business up. You're like, okay, I would love it if my business sold for X, Y, and Z. Well, then if you're early in the process, then you want to retire in X amount of years, you start taking steps towards that. And engaging an SBA lender or a bank partner can help you kind of at least get an idea on what that looks like going forward.
So, Michael, you mentioned, I guess as I get thinking about this, there's a couple things that are in my mind. Eligibility, like what do I have to do to be eligible for an SBA loan? And what do I need to start gathering to apply? I mean, I'm assuming you're gonna, pull my credit history and you mentioned a little bit before, if I'm a new startup, I'm gonna need some type of a business plan. But what else is involved and what else do I need to prepare as I get myself ready to kind of go down this SBA route?
Yeah, sure. And as it specifically applies to DME businesses here for a second, largely every one of them is going to be eligible provided that they are a for-profit company and fall within the size standards of SBA lending, usually determined by revenue and NAICS code, which can be found on the SBA's website. It does change often, and with new policy can sometimes bring new changes. So for this conversation, I'll leave that a little open-ended, but from an eligibility perspective, those would really be the two main things for the business. The two main things, or really the primary piece for an individual here at the moment, is that they need to either be a U.S. citizen or a lawful permanent resident. Either or, and the ownership must also 100% encompass one of those two items as well. So provided those pieces are met, generally speaking, you're going to be eligible to apply for SBA financing in any circumstances. Now, in terms of what you should be looking to provide your lender, make sure you have clean financials. So this is going to look like 3 years of business taxes, 3 years of personal taxes, fiscal year end income statements and balance sheets, year-to-date P&Ls and balance sheets, generally through month end, business debt schedule, personal financial statement, have everything in order. If you are a startup, that's where you get into the business plans and the projections. But primarily, if you're just looking for access to additional capital in the form of working capital or an acquisition, we'd also, of course, need to look at the subject businesses financials that you're looking to acquire. But if this is just for you and you're just coming to me, in general, just those few things that I mentioned previously are really all you need to do to bring a full package to credit and get the ball rolling with your particular lender.
And the only thing I would add is, obviously check with your bank partner. They may have some additional requirements. And also don't be afraid to ask your bank partner, do you guys do do you work with startups? Do you work, depending on what stage your business in, just ask them on the forefront, is what I'm doing something you guys, your company works with, right? So don't be afraid to ask that and then just confirm. But these baseline items that Michael just said are going to be pretty typical on what they're going to ask for. So yeah, get as much as that ready on the front end, and then just kind of confirm with your bank partner what it looks like to work with them on this type of project, if they're comfortable with working these type of projects. And if they do, are they a preferred lender? There's a few other things, and those are just things to kind of think about as you're figuring out what's required.
Sounds pretty simple, not too complicated. So let's say I'm ready to go. I'm a small business owner and I've checked all those boxes that you just listed. Good credit history. I've demonstrated the ability to pay the loan and my business plan looks great. I've checked all the boxes. Any other advice you can give me just when I'm ready to pull the trigger and start applying for an SBA loan?
Yeah, I mean, those are really the main ones, right? But it's crucial to maintain good financial records, and ideally it's historical as well. The SBA does not necessarily require those historical financials to be cash flowing in each of the years, but to Gene's earlier point, this is where every lender is going to have their own box, so to speak, on what they may feel comfortable with. So my best advice for anyone looking to get SBA financing at all is to collect that initial package, have the conversation with their bank, do a ton of research. The nice thing about the day and age that we're in right now is even though things are ever evolving, there still is a ton of information that you can have searching the web, looking up on your own websites, looking up through the SBA's website specifically, just reaching out to me, reaching out to Gene. I mean, we're always happy to help. Your banker, I'm sure, is always happy to help. But having those early conversations is crucial. It's so much easier to go through the application process with SBA being that primary focus when your whole team knows what's coming versus packaging something up because you have something that needs to be done tomorrow. So as early as you can kind of get involved and get your banker and your partners involved in this process is probably the most crucial thing outside of just maintaining those clean financial records to getting started in the SBA space.
Yeah, Tyler, this can be a super emotional process, right? You're charged up, you're excited, you're starting a new DME company or whatever that might be. You want to purchase a company. You want to, this can be a very emotional process. But I think it's just important to wrap your head around what's eligible, what you want to use your funds for, figure out what's eligible, have those, like Michael said, early discussions with your bank partner. Like, hey, if I'm starting a new DME company and I've never had one before, I'll have that conversation with your bank. Like, hey, do you work with startups? Because some banks aren't comfortable doing that. So just have a conversation with someone like, okay, if you are comfortable with startups, what is it? What are an eligible use of funds for that I can get funded for my startup? Like, what can I use the money for? Right? Because nobody's just going to put $1 million in your bank account and say, hey, open that business. Good luck. We wish you the best. No, there's due diligence in this process. So have those conversations, understand what that looks like, and then find out, depending on your project, does your bank partner like working on those projects? Some banks won't want to work on a restaurant, for example, but some banks will, so it just depends. So have those conversations, understand what you want to use your funds for, be really clear about that, and then understand what those requirements are, and then bring those in. And don't be afraid to just say, hey, listen, I just want to have an idea of what this looks like. I don't necessarily want to submit my project to the SBA. I want you to maybe just take a look at what I have, run it by your team, and you dictate to me like, hey, is this something we should move forward with your organization? So having that understanding, having a relationship with a partner that's going to be submitting you with this project, I think that's key. So, and a relationship goes both ways, right? You're providing honest and open feedback and intent, and your bank partner, your finance partner is doing the same back to you. So I think if you can create a collaborative approach for this, it's going to go a long way into you having a successful project. I mean, Michael's got hundreds of examples of, and a lot of them are going to be around. I feel like when I work an acquisition project, for example, is when the seller and the buyer are upfront with each other about what they're trying to do, right? Everybody's working together side by side, and then the bank's working with them, and everybody's working together for a common goal. Seller's up front, like, hey, listen, Tyler, I want to retire. That's what I'm trying to do. And the buyer's like, hey, Michael, I want to buy this business because Tyler's retiring and I love this business. Okay, here we are. This is what we're trying to do. How do we get to be where we want to be? Right. So, and then when you have that type of everybody kind of working in conjunction on a project, those are the projects I see get done. Those are the projects that have success. When you have this, like, well, Tyler's hiding XYZ, doesn't want to work, I think he wants this. Nobody's seeing what they actually mean. And we're just kind of running through it's government financing. It's, there's checks and balances to this. So if you're just kind of throwing stuff in the wall and hoping it works out, those are projects that I typically see have a hard time getting done. So that would be get your team in, get a team that's on board with what you're trying to do, have a full understanding of your project and what you need the funds for, and then kind of go from there and keep inching closer to that final goal, whatever that may be.
It's great insight, Gene, and the example you share is very real right now. There's a lot of people in the industry that are ready to retire. We're seeing a lot of folks that are, some of the newer folks that are coming into the business, and they're going to be potentially taking over the business from mom and dad. And it sounds like this could be an option for them. And then there's just people that are, I'm ready to move on, or I want to get into real estate. I'm going to do something else, and I want to hand this off to such and such company. And so there's a lot of that going on in this space, and sounds like it's a great option, a great direction to go. And also the example you shared, Gene, of somebody that's maybe sees this industry as attractive and growing, which it is right now, with the baby boomers getting to the stage where they want to stay in their home, and they're using medical devices now that they weren't using before. So there's certainly opportunity here, and this is a shameful plug, but if they're coming into the industry, you need to be talking to VGM, because we've got the tools that can help you. And at some place along the line, they're going to be looking for an option like this, and we're going to be connecting them to you two gentlemen as well. So thank you both. We're going to wrap this thing up, but your incredible insight. Thank you so much. And now that Gene and Michael, you've been introduced to our listeners here, you can reach out to both of those gentlemen yourself directly if you'd like, or reach out to myself or anybody here at VGM. And we've got a close relationship with these two gentlemen, so we'd be happy to do some introductions and get you involved. But anybody on the lines here, if you're considering growth, if you're considering expansion, or you're just needing some working capital and you believe an SBA route may be the route for you, which it sounds like, from our discussion probably will be. So reach out to one of us, and we'll get you pointed in the right direction. And we look forward to taking care of you. Thank you guys both for being on the call, and appreciate everybody listening in.
Thanks for the partnership. Have a great night. Thank you.
Take care. Okay, that's it, guys.